Hello, everyone. I'm Matt Clark, research analyst with Money and Markets, and it's time for another episode of Ask Us Anything. This is where Adam, Charles, myself, we come together and we get questions from you. Sometimes I'll throw in some questions, and we try to answer them to give you the best insights into the market, into the economy, into anything that might be impacting any of that. We try to do that by getting questions from you, and you can do that by submitting them to feedback@moneyandmarkets.com. Just email that email address, feedback@moneyandmarkets.com. If we use your question in any of our upcoming videos, whether it's Ask Us Anything, the Marijuana Market Update, maybe the Stock Power Podcast, we're going to hook you up with some very cool Money Markets gear for free. Hats, t-shirts, sweatshirts, all sorts of great stuff. We have it. You send us a question, we use it in an upcoming video, we're going to hook you up. We've done that with a lot of people so far, and we love to do that. So submit your questions. Love to see what you have to say. Now, joining me for this episode is none other than Green Zone Fortune's co-editor Charles Sizemore, joining us from his remote bunker somewhere in South America. We won't get into the reasons why he's in a bunker in South America. He's really not. I'm kidding. I just like to give him a ration because it's what I do. And Charles, I really just want to jump right into it because we've got a couple questions here that I want to get to and ask. The first one involves action taken by Congress recently, and this is something that has become very rare of late, and that is they've actually broken open a logjam they've had for the past 2 or 3 years, and have passed at least the Senate anyway, has passed 2 significant pieces of legislation that's poised to have a huge impact, not just on American businesses, but on everyday people. And I want to talk about one in particular to start. And that is the Inflation Reduction Act. This is the act that has been in the works for the last year and a half. It started out as, I think, $1.9 trillion, and Democrat Senator Joe Manchin from West Virginia and Democrat Senator Kristen Sinema from Arizona both were against it. And because the Democrats don't have a large majority in the Senate, they couldn't get it passed. This went back and forth in terms of negotiations on what was going to be in the bill, what was not going to be in the bill. Finally, they came to a resolution. The Senate passed it last week. The House is poised to pass it and send it to President Joe Biden's desk. And I guess the question is because this is in the news right now and everyone is understanding at least the broad strokes of what it is, do you think that the Inflation Reduction Act will do anything to help the job market, which is actually pretty strong, as it were, but could always use a nice injection of capital, or reduce inflation?
Well, okay, so I would repeat what you said. This is one of the most significant pieces of legislation in years in terms of its impact on environmental law. It may actually be the biggest since the foundation of the EPA in terms of its impact on medical on Medicare. I mean, it's certainly the biggest reform in recent memory. I actually don't recall I actually don't recall the most recent, probably the Medicare Part D edition back in the Bush administration. Beyond that, some of the changes to the tax code, it does tweak the relationship between dividends and share buybacks, because it does have a proposed 1% tax on share buybacks. That's potentially the biggest impetus for dividend stocks since actually also the George W. Bush administration. You have to go back to 2003. So it's a big piece of legislation that's significant. But I actually don't think it's going to do anything with respect to inflation, at least not anytime soon. Over 10 years, call it, it may have an impact on drug pricing. It gives Medicare the ability to negotiate with pharmaceutical companies over the price of drugs. That's good. That's certainly not a bad thing. Lower drug prices are good, but it gets phased in over time, and it initially is only going to cover about 10 drugs. So this is not nearly as big as it's billed to be, and we're not going to really feel those results for years. Beyond that, encouraging domestic energy and encouraging solar and wind energy over the long haul, that's going to lower energy costs for sure. It's not going to have any impact on CPI inflation over the next year or two. I mean, I have no doubt about that. So while this is a very big piece of legislation, a very significant piece, it's one that scholars will be talking about probably for years. It's really not well named because I don't see it having much of an impact on inflation anytime soon.
Right. And it's kind of a misnomer. I think that's, Washington loves to put funny names on bills, whether you're for or against it, to sell that. And I think the Inflation Reduction Act is, I don't want to say it's misleading, but it's not necessarily.
It's good marketing.
it is great marketing, but it's not necessarily to the point of what the
Well,
bill
it's funny.
was.
Ironically, the other piece of legislation that passed that had a bit more bipartisan support was the CHIPS Act, which encourages semiconductor manufacturing here in the U.S. Now, again, we're not going to have any immediate benefit from this. It takes years to build a fabrication plant. I mean, this is a very long-term project here. But if you are looking at, what's the root cause of inflation right now? It's a couple of things. It's Federal Reserve policy and the supply chain just disaster that's unfolded after COVID. Now, the supply chain's not going back to normal. Like it's not. Executives used to brag about how complex their supply chains were, how we have factories in Asia and mid-level stuff over in South America and yada yada yada. Final assembly in California. They used to brag about how big and complex their supply chains are. After COVID, nobody does that. And then this just in succession, you had COVID, you had the Russian invasion of Ukraine, you had just these new tensions with China. All of that has really reinforced this idea that supply chains need to be simpler. We can't be dependent on this far-flung, global thing. We have really the reverse of 40 years of globalization. That's very inflationary. So bringing more of that manufacturing home, getting that infrastructure in place, ultimately that's going to offset some of these inflationary forces. But even this is going to take several years.
And that's interesting that you bring that up, that in terms of having a greater impact on inflation and even the job market, that the CHIPS Act is maybe going to have a greater impact than what's billed as the Inflation Reduction Act. Again, all things aside, all things equal, these are both bills that will have a solid impact on the economy. They will have an impact on inflation. They will have an impact on jobs, and they certainly will help businesses. It's just not going to be an overnight thing. It's going to take years probably for these things to really the benefits to materialize. Deficit reduction. That's why deficit reduction projections are over.
Oh, deficit reduction is never going to happen. I just don't hold your breath on that one. Like that's the one creative fiction of all this. The notion that they might reduce the deficit.
But still, the reason why it's done over a decade and not over 2 years is because that's when you see the bigger impacts of legislation that's passed of this magnitude. Is that deficit reduction doesn't happen in a year, doesn't happen in 2 years. It happens over a decade.
Deficit reduction doesn't happen. You let the sentence go on.
Well, it hasn't. It hasn't since the 90s.
Deficit reduction doesn't happen. Period.
No, it hasn't happened since the 90s. So, and there's nothing to suggest it's going to happen anytime soon. Okay, well, now this leads into a question that we got from Martha, because I want to lead off with this to kind of set up this, and that is, how are you investing in green zone fortunes based on the Inflation Reduction Act? Because, it's kind of interesting that all this kind of comes to a head. So talk about, you, Adam, myself, our entire team, we talk about this all the time. We work on the strategies, look at these mega trends all the time. So let's kind of, pivot into how we tailor green zone fortunes into things like the Inflation Reduction Act.
Well, the short answer is we don't. We don't invest, or we don't create an investment, an investment thesis because of political developments. I've really never seen anybody successfully do that. It doesn't work. That said, to the extent that politics can reinforce what we're already doing, that's a good thing. So Adam identified renewable energy as a major megatrend years ago. You and I very quickly got on board because it's an obvious trend. It's very, it has something to do with, I can't say it has nothing to do, but it has comparatively little to do with politics. It's economics. Renewable energy is ultimately cheaper than oil and gas today. Newer solar and wind projects are actually cheaper to operate than natural gas, which is the cheapest fossil fuel. And basic economics tells you that you're going to have a bigger and bigger piece of the electrical grid, a bigger proportion of the electrical grid moving to renewables. It's just basic economics. So we've been looking for investments in that landscape for years now. We found some really good ones. This has been one of our most successful investment themes. We've done everything from storage to batteries. We've looked for electric vehicles. We've played it from every angle you can play it. And it's been a really good trend for us. Where we would see the Inflation Reduction Act kind of, where does that fit into all of this? Just throws gasoline on the fire. These trends were already well established. And then now you have the federal government coming in and dumping tens and tens and tens of billions of dollars into this. That's just like, there's already this raging inferno and someone just put a big can of gasoline on it and kaboom. That's where we would see the benefit there. It turbocharges these trends that were already in place.
And again, you're right. These were trends that we were talking about a couple of years ago, before anything involving Russia's power grab with its invasion with Ukraine, before the economics really set in, anything like that. And we got some things like, you guys are crazy, this isn't going to happen.
We were country before country was cool.
We were country before country was cool, and we are still country, even though country is cool, or something like that. I don't know.
I think we might have botched that metaphor, but no, I mean, the takeaway here is that we don't react to political developments. We take them into consideration. At the end of the day, political moves can affect your portfolio. You have to be aware of them. And I would say I mentioned the impact on dividends. We are focusing more on dividends these days in green zone fortunes, and the Inflation Reduction Act actually reinforces that as well, because now that buybacks are going to be taxed at 1%, at the margin, that is going to encourage companies to perhaps take that marginal dollar and, instead of using it for a buyback, use it for dividends. I mentioned the George W. Bush tax cuts back in 2003. We saw a similar deal there. Like, he lowered the tax on dividends. Previously, dividends were taxed like bond interest, and he lowered that to something closer to today's rates, where dividends are taxed at a favorable rate. And the result was a lot of companies that never dreamed of paying dividends suddenly started paying dividends, with the biggest example being Microsoft. Big bad Microsoft, which always saw itself as this massive growth company, decided to convert itself into an income company or an income stock, because it made sense under the tax code. So I think we are looking at some potential like that as well.
So we've talked about the mega trend in terms of green energy, and I'd be remiss if I didn't try to point to viewers in the direction of where they can learn more about that if you don't already. Up in the top corner up here, we're going to put a link to where you can find out more about this mega trend we've talked about over the last couple of years, and is now just become supercharged and is really taking off. And we want to cue you in on how you can jump into it and be a part of it as part of Green Zone Fortunes. We'll put a link up top so you can find out more. And of course, also you'll learn more about dividends and things like that we focus on in Green Zone Fortunes as well. Charles, that's all the time I got for you right now, so I'm going to let you go. He is Charles Sizemore. He is the co-editor of Green Zone Fortunes, coming from a remote bunker in South America. And I am Matt Clark. I'm the research analyst for Money and Markets, coming to you from the sunny Atlantic shores of South Florida. It's not really a secret where I am. It is where Charles is, because nobody knows. He doesn't tell anyone. It's just weird that way. I really don't know. But anyway, nonetheless, appreciate everyone who is taking part and listen to our videos, whether it's Marijuana Market Update, our new Ask Us Anything series, or the Stock Power podcast. Definitely do appreciate that. If you have a question or anything like that you'd like to ask, and you'd like Adam, Charles, or myself to answer in any of our videos upcoming, email us at feedback@moneyandmarkets.com. We would love to do that. We'll hook you up with some Money and Markets gear for free for your efforts for doing that. So again, he's Charles Sizemore. He's co-editor of Green Zone Fortunes. I'm Matt Clark, research analyst for Money and Markets. Until next time, everyone, safe trading.